I just heard an absolutely shocking piece of data that retail households are at their net highest buying period in the stock market on record, or nearly, and that retail inflows in the stock market continue to this day despite the massive bear market and crash. So what does it mean? Well, it means that right now, retail are currently still buying the dip in the bear market, whereas institutions have risked off tremendously. Now, after the carnage that was Three Arrows Capital and Luna completely falling apart, now Celsius looking like it could be in bankruptcy territory, though we don't know exactly what's going on there. We heard the word that Goldman might be trying to buy out Celsius. But the reality is that everybody's wondering, is all of this blood on the highway enough to start buying crypto again? And what we need to understand is that whenever the macro delivers another massive leg down, we can expect most likely another leg down here in crypto land. And right now, the macro is absolutely crazy because it's looking as though the housing market is about to get its first major setback of this entire cycle, with new home listings spiking and skyrocketing over the last few weeks. And of course, house buying is a lagging indicator. And I'm not saying that this is another 2008. No, a lot of analysts have come out and said, no, the housing market is generally far more healthy than it was in 2008, with far less leverage, higher quality buyers and loans going out. However, what you need to know is this: the housing market is turning right now, and that cycle could lead us to a significant wealth effect happening on, American households. Most households measure their wealth by the value of their home primarily, as well as their retirement and stock portfolios. And obviously stocks have gotten hit hard, but the home prices have not gotten hit hard at all. In fact, they've been in massive bubble blow off top territory, even up to the last few weeks and months. And so as a housing market starts to turn around, that could spell absolute disaster for other types of risk assets as people start to get very risk averse. We're also seeing the credit markets starting to slow down. Credit purchasing is starting to slow down dramatically. We've just seen for the first time all kinds of dramatic and painful sales from big box retailers who say they stocked up on the wrong inventory during the supply chain crisis earlier this year, and now they have to essentially take losses on all that inventory, which is going to completely crush earnings. And so we're going to see earnings season, which is coming in soon, absolutely most likely decimate whatever chances we had at avoiding a recession. In my opinion, that earnings season that we're looking at over the next few weeks, not my opinion, people much smarter than me, is going to bring us another leg down in the stock market. And with that next leg down in the stock market, I would be absolutely shocked if we didn't see some massive selling here in crypto land. Now, there's another factor that we must consider as well, that retail continue to buy the dip in the stock market. And that is something that is quite scary, because until retail capitulate, I believe that there is still another massive capitulation candle left in the stock market. Now, it's not fair to make that comparison to cryptocurrency, because cryptocurrency is a primarily retail-led phenomenon. So of course, retail are going to be disproportionate in crypto. However, retail are at their highest net buying per household almost on record, and that is absolutely crazy. We also see that Amazon is adding Amazon Prime Day, a second Prime Day, which indicates that their earnings must be definitely struggling. The only reason why they do that is if they were having an absolutely apocalyptic style of earnings season. And so what do we see here? We see the writing on the wall that there are many more economic factors, macroeconomic factors, that will impact the world of crypto. Remember, crypto lives in a macro environment. However, smelling things like I've heard of Russia is potentially on course to default on some major debt. We see what's going on with the Bank of Japan. Just know the world is experiencing an absolutely historic amount of economic pressure, of economic uncertainty. And when times are uncertain, things like cryptocurrency are typically the first things to get sold. Now, remember, when things outside of cryptocurrency impact the price, that to me is a very good sign. This doesn't mean that Bitcoin was hacked. Doesn't mean that Ethereum and its value props have decided to become irrelevant. That's just the price. That's the average price, which is dictated by the most fearful last seller, is what determines the price of any asset. So understand that none of the internal sort of fundamentals of cryptocurrency are really being affected. This is all macro. This is everything outside of crypto, but there's significant factors. And just know that as we see this macroeconomic storm start to manifest with earnings season, the housing market starting to turn, credit markets being used up, less spending, we see it all coming together. And that means that we're most likely going to see some more pain in the mainstream economy. And with that pain, we can see more depressed prices here in cryptocurrency. Again, I feel as though we are one more capitulation candle away from real buying season, but just know we also have what I tweeted about, which is regulatory fears. And because of Luna and UST and Celsius and all of these sort of hidden pieces of leverage in the crypto ecosystem, things that I wasn't even fully aware of, which I should have been, and my team is now, like, as much as possible researching ad nauseum, these are the types of sort of break points that everyone needs to be aware of, and that most likely regulation will come in to install some sense of, guidance on. Now, we hope that that regulation is well formed. We have typically seen more aggressive and hawkish regulation, at least talked about from certain bodies out of the US government. And so there will be a mix of another bout of macroeconomic pressures on crypto as well as regulatory fears here. So I don't see us having a V-shaped recovery or massive recovery anytime soon. And I think it's STFR, which is sell the effing rally time, where if you are still risked on, again, we said this at about 52K. I had a tweet on December 7th where I said, hey, look, if this crash is making you nervous and you feel underwater, take exposure off, sell now. And then as we started to crash further and the bear market started to become more obvious, we said sell again. The reality is that we still have potentially another bit of down pressure to go, and that last bit of capitulation can be very brutal. So please protect yourself if you haven't done so already. I see still shocking amounts of people who haven't protected their portfolios at all. And the one thing I would say is, looking back at 2018, I wish I had protected my portfolio better, because, I got decimated because I always thought that, this was that bounce, this was that last dip. And that's why once we started to enter into clear bear territory, I've tried to be as cautious as I can, and patience is the name of the game. Meanwhile, NFTs, like I said, they're still an interesting area to watch, and I will be watching them very, very closely. So as always, I hope this information has helped you. What I've started to do actually is, I know you guys have seen my series with FTX. The reason why I teamed up with FTX is because they have the best product in market, without a doubt. This is not a sponsored video by FTX. I say that all to everyone. I tell all my friends to sign up for them because I have not found an exchange that I like to use or I find as functional. They also have a feature that is very useful for the bear market. On the app, you can do a DCA mode where you can set every week to buy X amount of Bitcoin or Ethereum or whatever coin you want. You can set it and forget it. That's a very useful feature. And if you guys want to get signed up for FTX, check out the link below. As always, my name's Elio Trades. If you enjoyed that, smash that like button. If you enjoyed these videos, I'm doing vacation videos for you because it's so important to keep people up to date, to keep people focused on this market, and also to provide the best possible information during these critical and volatile periods where a few good moves could set you on course for a much more successful future. I believe that to my core. And if you guys are excited by this and you're getting value out of these videos, destroy that like button, subscribe, and I'll see you very soon on the next episode. Cheers.